Silicon Valley Bank went from business as usual to out of business in just 2 days. This might be the fastest collapse of any bank in history, which immediately raises the question, are we gonna have a new financial crisis? Can something like 2008 really happen again, and was Silicon Valley Bank just the first of many domino pieces to fall? Because if that is the case, we have to get ready for an economic crisis that is far larger than just inflation and Ukraine war. So let's have a look at how Silicon Valley Bank could collapse as quickly as they did. On a Wednesday, they announced that they will be selling bonds worth $21 billion. At the same time, they announced that they will be raising capital from a venture capital firm called General Atlantic. Both of these moves, selling bonds while at the same time raising capital, were made to reassure their investors and their customers. Unfortunately, it had exactly the opposite effect. Silicon Valley Bank has a quite unique customer base in that most of them are venture capital firms, so financial experts. And these experts easily get spooked, so when Silicon Valley Bank made those announcements, those venture capitalists in turn recommended their clients to quickly withdraw their money. They made that recommendation on Thursday, which led Silicon Valley Bank's stock crash by 60%. Naturally, at that point, clients were really freaked out. They started withdrawing all the cash they could get, which triggered a bank run on Friday. Just a few hours later, Silicon Valley Bank collapsed. So far the timeline of what has happened. But the real question of course remains, was any of this preventable, and is this just the first step of a major crisis? For that to figure out, we have to understand the client base of this bank. Because as the name suggests, a lot of them were Silicon Valley tech companies like for example Roblox or Roku. Traditionally, Silicon Valley startups burn through a lot of money in a very short time, which means they need a lot of venture capital. Last year, however, due to the economic downturn, venture capital became much less easily available. So what did those cash-strapped startups do? They withdrew more money than usual from their bank, the Silicon Valley Bank. So this already gives us an indication that this is an isolated case. Because most banks have a lot of private customers, but not so many small tech startups as their clients. Besides that, it is also quite unique that so many venture capital firms were involved with Silicon Valley Bank and immediately recommended their customers to withdraw all their savings. Quite frankly, that kind of recommendation would ruin any bank. So even though Silicon Valley Bank going bust is the second biggest bank failure in American history, it is unlikely to be the first of many domino pieces that fall. The financial system of 2023 is much more stable and better funded than it was back in 2008. In many ways, we have in fact learned from the lessons of the financial crisis back then, so another financial crisis is highly unlikely. What can however happen is that a lot of those small startups from Silicon Valley who had their funds at Silicon Valley Bank will have liquidity issues. And the fact that right now a lot of venture capitalists also don't have access to their funds that they had deposited at that bank only shortens the amount of money available even more. It remains to be seen how the story continues, but one thing is for sure. If a healthy bank like Silicon Valley Bank can collapse in just 2 days, we definitely are in for some further turmoil in the future.